Welcome to the Pump and Dump channel. Today I'm to talk about German bonds, negative interest rates, the ECB asset purchase program, and look about how this can impact the market in the future. So in this chart here you can see what the development of the yield was on the 30-year bond over the last 12 months. We came into negative territory around here real hard in August. The the interest rate just kept falling and falling, and of course in August many people are on holiday in Europe, so you could say that there were some people who stayed home and they just pumped the market because there was not the the liquidity in the market, because the pension managers and investment house people, they were all on holiday chilling in the sun and they were not active in the market. So we can see how interest rates came down in August. We have 2 weeks where they were minus 20 basis points on the 30-year bond, and since then they've been rising again, and now we are at a positive return. I mentioned that in my last video of about 0.12% on the 30-year bond. So that means after 30 years you will get a total return of 385 on this 96.15. So going on to the bond sale, the auction that the German government had, there's an article from the 21st of August. They mention here that in the headline, of course, is always confusing, but they mention here that Germany sold 30-year bonds with a negative yield for the first time. They sold it with a negative yield of 0.11%, but the key thing to look at is that the demand versus the supply is telling a story. We can see that only 41.2% of the bonds that were on offer were actually bought by what I would call speculators. And now looking at who would buy these bonds, we need to look at ECB policy. So ECB policy, the key thing to look at is that they have their main deposit rate at 0.5% negative, which means that any institution who deposits money with the ECB has to pay this amount in interest on an annual basis. So for an institution who has money that they cannot find a place to allocate it, to lend it out to, I think they will logically look at a 30-year bond, and whether it's minus 0.2% or whether it's minus 0.4%, that is better than looking forward and assuming that this negative rate is going to stay there for a prolonged period of time. Then the bonds do look attractive, and I think that after reevaluating this over the weekend, that this is actually what is causing the negative yields in the Eurozone. And what what the ECB is trying to do is get them to loan out money, but it seems they can't find anywhere to put it, and that's kind of strange. But that's kind of what is happening. The general public is not interested in borrowing money for cars or houses. A lot of people, they are renting. They're looking at house prices being extremely expensive, and whatever the interest rates are, they don't really care. They just look at it on a face value, and they say they're not going to buy a house, so they're not buying. There is no mortgage issuance going out and increasing over time, and that's kind of where we are at. The banks can't find people to loan money to. The only way to really, for them to loan out money is to find the fewer and fewer people and drive up asset prices, and then loan out a higher sum to those people and then collect some interest from them. And until that spreads to the general population, those people who are borrowing money to buy houses now will benefit from the house prices going up because of this weird central bank policy. Now, going back to the ECBs, they mentioned they had an asset purchase program. Here we go, 20 billion per month asset purchase program. Now, a lot of people, especially if you read this article here, there's this implication that they are going to use that 20 billion to cash out these people who have been bidding up bonds to ridiculous levels where they have a negative yield, and therefore they say that the ECB is the put, and therefore the people who are holding bonds and buying them with negative interest rates, they will make money, and that they're actually smart. But I don't kind of see that, going on in the future. If we look at the asset purchase program, here's a list of things that the ECB can buy. And for me, the definition of an asset, there is in here a definition where it mentions that in the future it can generate cash flow, reduce expenses, improve sales. These are kind of metrics that define an asset, but for me an asset, especially for a bank, is one that generates a positive return in terms of cash. And if you think of the German bonds, maybe not the 30-year here, but the 10-year, the 2-year and 5-year, they all have a negative return. I don't see the ECB buying these. I would think that they would maybe go with the 30-year German bond, or they would go with some Italian or Greek bonds that have higher interest rates, and that's what they would probably buy. And then they would buy corporate sector bonds, something like that, asset-backed securities, third-party bond purchase program. Yeah, that's kind of what they would buy. I don't think they will cash out that, and the reason why is a speech by Christine Lagarde, where she was talking to the people at the ECB about what her research was showing and so on and so forth. And basically what she mentioned is that people in the Eurozone, they were less concerned with not earning enough money to sustain their life, which is, of course, depending on who you ask, it's always different. But they said their main concern was that there was corruption in the system. And if you think of the fact that people can buy bonds that have an implied negative yield, and then they can sell it to the ECB and be cashed out and have this guaranteed bid, that they can make a profit even though they're allocating money stupidly, and the system is definitely corrupt if that's how it works. If the ECB is found to be buying these bonds here rather than just this bond here, then you would definitely point at the ECB and say it's corrupt because it's helping certain groups at the expense of other people. So that's kind of how I see it. As mentioned in here, I think that this main deposit rate being negative for the financial institutions is driving them into buying bonds at these silly rates of minus 45 basis points, because they're looking at this here. At this here, they can either lose 0.5% or they can lose 0.45% on this duration here. Of course, you would say, why would they buy a 5-year bond or a 2-year bond with these negative rates that are higher than that? And it's because, of course, the logic tells you that this is unsustainable in the long term, and that this has to stop at one point. And if you're locked in for 30 years or for 10 years, then your returns are going to be really bad, because like here, if you lose a euro 43 on your investment over 2 years, you can reinvest that to 100 euros that you get back at a later point with, let's say, a 2% interest rate over, let's say 2 years again, and then you can make back your money that you lost. But if you lock yourself in for 10 years and you lose 457, you don't know what's going to be happening after 10 years, and you won't know what prices or interest rates will be in the market, and therefore some people will prefer to lose a bit more over a shorter period than they would be willing to lose over a longer period. And that's kind of where it's at. That's what I see happening. ECB, of course, is promoting this nonsensical, I don't know how to call it, this bubble, but that's where we're at. The demand is not that strong, and I think that that's kind of where it's going to end this video. Leave your comments whether you agree or disagree. You can subscribe if you want to be notified of any future videos that I put out, and have a good day.